What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis video as well, typically dropped on Sundays. But with that being said, you can check me out on X and get a daily Pulse of the Market, as well as I do voice memos on there to essentially give you the insight of what I am looking at during that particular day. So before we get started, also remember to go ahead and drop a like, and let's roll right into this, as we have a lot of major important information that we need to be going over. Again, we are in the end game. We are in essentially the last 30 days of this election period, and it's going to be one of the most historical election periods currently as of right now, with some very interesting information. We've talked about this for the past couple months about how things are going to start accelerating when you get closer to the election. You're going to start getting more information. Big news obviously has been dropping everywhere from the assassination attempt to P. Diddy to essentially non-farm, the revisions that we've had, and essentially the rates. There's been a lot of drama in the market nonetheless. So the market is very emotional. So that is something you need to keep in mind as of right now. Again, understanding that I always talk about this, and if you followed me at all, I always talk about two different perspectives. There is essentially the narrative that is always thrown out there that you typically get off of essentially mainstream media, and then you have the reality of the situation. And a lot of times when the reality of the situation touches this utopic state or this utopic perspective, which is meant to try to control the masses, right? You don't want to essentially produce panic, because if there's panic, you can't control the masses. So you have to steer a narrative that is promising, hopeful, whatever the reason is, to be able to, again, steer that narrative. And again, there's a lot of fraud and corruption that currently goes on. And if you're in the markets at all, you know these things typically just by watching charts, watching headline news, and seeing how it reacts, and understanding that essentially the general masses is only headline news readers. And if there's a bad sentiment to that headline news readers, people typically don't even watch headline news, especially as of right now with everything going on with the hurricane stuff and the relief for that and all the things going on around that. Circulating around that is quite difficult to digest for a lot of people. But nonetheless, let's not get too much into that and let's focus on what's currently going on right now. So this is where we start looking, and I mentioned all these things, and this is where I start talking about the reality of the situation. Despite what you're seeing, there is some really there's a real big underlying current that is looking really, really bad. And understand, yes, there always are essentially a bad sentiment to the market. So you do have to understand that. Again, it's always manipulated to keep it propped up, but ultimately understand, again, at this current moment, it is probably one of the worst times we've ever seen since 2008. And I know people don't want to hear that. People are saying, no, it's fine, it's strong and resilient, but it's not. And that's why I do this channel, to report to a lot of those different things and trying to understand where your risk should be during that particular moment. And so this is why you need to be at least talking and thinking about these things and how it can play out. What's the next event that's going to occur that could potentially trigger that shift? And again, understand when to be applying risk during that time. If you have, the world's falling apart, but then you start getting a massive injection of money in the short term, that's going to start being bullish. And we're seeing that in China, right? China's been falling apart. Now they've tried injecting $500 billion into the economy. That didn't help. So now that they were at a point to where they had to just start cutting rates, and everybody that had a current loan, well, let's just cut that by 50 points, right? They're doing everything possible to stimulate their economy, right? They're in a deflationary stage, and a critical at that. So if this doesn't work, that is going to be a huge problem. And so that's the problem we may be shifting, is that, okay, so you get to a point, and I've talked about this before, where you get to a point, I've been talking about the different stages as we've been tackling inflation, as we've been tackling now rate cuts at this point, and unemployment and stuff. So you have to understand the cycle. So I've been talking through the cycle as we go. And I said, once we get to the point where we start cutting rates, you have to pay attention to where demand is. And if demand isn't coming back, that is concerning. And this is why you start seeing massive rate cuts, because again, you have to understand there's three different categories of things that we look at here. We look at essentially where the businesses are at. This is why we emphasize looking real closely at earnings. And then also on top of that, you got to understand where the consumer is at. The consumer health is very, very important. That's where your demand is coming from. And then also understand essentially where the Fed is at and where the rates are currently standing. And so with that being said, as of right now, the demand is slowly. I think it's what they're saying is it's not as bad as is, or that's how they report it. But like I stated, I think demand is way worse than it actually is. We get just last week we got a revision essentially saying that we had an extra, I think it was 500 billion or something underneath the mattress that we don't really have, and I don't really see the strength of that they're reporting. And so this is why you get a lot of people, a lot of these reports just don't make sense. It's just not adding up. If things were so great, why are the Fed cutting rates? You need to ask yourself that question and understand that now there's discussion of another 50-point basis move. But what we talked about last week and what is interesting this week is that what we had was we had port strikes that we were dealing with, which is something I didn't add here. The port strike started on Tuesday. Thankfully, it did end. I believe it on Thursday. It did end. It didn't end. It was delayed until January. So this is something I've talked about before, that what you're seeing is everything being pushed into the new president. You've seen massive amount of spending, all these things over the past year and a half to keep the market propped up till after the election. Once votes are cast, then at that point it doesn't matter, because the new president has 4 years to try to fix what is currently going on. And again, I always point this back to the underlying system is what is broken, and the manipulation and all that stuff comes from this other underlying broken system, which is the banking system. And understand that there are presidents in our history that have attempted to stop this from happening, from central bankers essentially kind of taking over. And they were successful only for them to essentially be ostracized. And it's a whole story, but what I would say is that you need to understand the system, and there are some really great books out there to read about that and understand what is actually going on. That will give you a good grasp and understanding what is even currently going on in our current economic environment, and the manipulation that occurs, because again, politics, and understand that again, a lot of these people are being fed and getting paid for essentially driving narrative, and that comes from a lot of these banking and a lot of other institutions that have a lot of essentially a lot of money, right? So with that being said, let's not delay anymore. Let's kind of get more into this. I kind of ranted enough, but there's a lot of preface going on here with particular things that need to be understood before we can kind of understand what our next steps are going forward. So with that being said, the weekly recap. So over the past week, we did have non-farms. They did come out yesterday. I'm recording this Saturday morning. So with that being said, we blew out expectations. I always talk about expectations as kind of your point, and they kind of understand that. So this is why they try to keep expectations, because if it's wildly outside of expectations, you could have a big move in the market up or down. And so these are things you need to pay attention to. And so non-farms came in way over expectations. But you have to understand what has happened is what we saw was a lot of it was, again, in a lot of these very low paying jobs is where you're seeing this growth. And primarily, again, where you're seeing it is in government workers. And understand this is why they can be heavily manipulated, those numbers. And again, it holds a heavy weight to the GDP and to a lot of these other non-farms and stuff. These data sets that are coming out, you have to understand they are trying to make all the data sets look good going into earnings, or going not into earnings, but ultimately going into the election. Now, this is typically done to some extent when you are going into election year, but I think even more so now, or maybe it's even being more so exposed now what actually occurs, because they're just not adding up. And understand the essentially JOLTS numbers and stuff have been showing a massive decline in the massive revisions we got, and then all of a sudden, the last 30 days. Again, you have to understand this is the last real payroll before you're gonna have. I think you have one more before the election, but this is the last one you're really going to leave essentially some sort of impact on the voter. So you have to make these numbers look good. So you have to understand where that number is and look deeper into the numbers. Again, these are all going to be revised because things are getting way worse. And just because we cut rates 50 points just 2 weeks ago, that is not long enough to really understand what is going on. It's not enough, period. It takes too long. You're waiting for loans to mature. It's because you cut it 2 weeks ago. People aren't getting loans like every 2 weeks. And yeah, there are some, but the demand for loans right now are way lower than we've seen in many years. So that came out this past week, and then we also have 25 out of every 1,000 changed hands. So this is related to not jobs, but related to houses. So 25 out of every 1,000 houses changed hands from January to August of this year. Lowest turnover in 30 years. Again, the high interest rates, but it's not just the high interest rates, it's the price gouging on the homes. And people, again, are still in this pandemic mindset to where they can charge, a ridiculous amount of money over essentially what they bought it for. And again, understand that was only a once in a lifetime event where you've had a major global shutdown, and then people, used cars were getting more expensive or holding value over a lot of new cars, which was absurd, right? You went through a very weird period in history, and understand that people are still kind of stuck on that mindset. And especially with the interest rates being so high, if they need to sell, right, they want to at least be able to kind of compensate for that so that they can still go turn around and purchase a home. But the problem is first of all, people can't qualify. People don't have the savings, despite all these revisions up and stuff. That's, you can pencil whip the numbers, but people still can't do anything, right? And understand this is why China, Europe is going through massive cuts as well. And then us in the new years is exactly what's going to happen. Once we get past the election, then it will be a different story. And then they'll blame it on whatever they want. But ultimately understand that this problem has been going on for a long time. And I believe you're essentially in a global depression at this point. You're not in a recession. You're in a global depression. If you look around at what's actually going on, things are way worse. You had the hurricane hit, and you don't get hardly anything reported about that. And people are just in bad health, right, across the board in general. So that being said, again, there's not a big turnover in houses, so understand that. So, and then since June of 2023, federal debt has surged to a massive $4 trillion. National debt has outpaced economic growth. That should be growth. Oh, if I could shift my growth by 2.7 times. So again, we are spending way more. And again, this has been pointed out by the Federal Reserve that you can't keep up this pace. And understand that right now the Federal Reserve is actually bankrupt. So that should be scary. But again, none of these things are reported. These aren't going to be in headline news because, again, if they hit that utopic state, that will influence the markets and draw panic and people running to the banks, pulling their money out because they don't know what's going to happen. That's not what they want, especially during an election year. So they will do everything in their power to manipulate markets and then turn around and then offload it, depending on who's in office. Will depend on how much they want to offload or how much they want to participate in whoever's in office. So again, things are in very bad shape, despite what is being said, despite what this number is, because we know that this is pencil whipped because of the federal job numbers, which again is just an interesting state. So, and then also this past week, the Middle East conflict is going on with Iran firing rockets in Israel. The funny thing that did happen with this was there was tons of videos on the massive amount of missiles that shot, and I don't believe actually a lot of people were harmed. So a lot of this is smoke and mirrors. again, Middle East in oil. This is something to keep in mind. And what is really interesting about this, again, not trying to get super political and fly both ways. And I know you teeter on the line when you start talking about these things, but you have to understand that OPEC was trying to make a deal. Oil was just randomly selling off, and they were trying to keep it propped up. And it was surprising a lot of people that oil wouldn't essentially stabilize and start pushing back up. So oil started selling off dramatically, so even with OPEC trying to make that deal. And so now all of a sudden you got this global conflict, and Iran comes out of which seemingly seems like it comes out of nowhere, that, hey, there's just Iran's going to start, well, essentially we've funded them just a couple years ago, about 2 years ago, we had this massive bill to go fund Iran. And then now 2 years later, they're attacking Israel. Now we're going to go into war with Iran. This is what is ridiculous and absurd. And understand the manipulation and everything that goes on, because essentially we are a war machine and we need to keep this thing going. All that being said, when we are looking at this in the market, it didn't have that big of a concern in the market. Again, one thing that can cause issues is all with the tensions going on. Supply and demand is always what matters. And I talked about this even with when we started looking at what was going on with the port strikes, and understand that is going to be a big inflation concern. Now they've drawn this out till January. If a particular somebody were per se to come in office, they can offload the whole shebang. They can essentially do port strikes, and they can knock back the banks, and then you would see utter chaos, just collapsing everything. And so this is what I'm saying with the massive spending. When you start capping that spending and saying, no, you can't do this anymore, you're going to see a massive implosion happen. And then they have to have essentially a fall guy, right? So you have to have, I'm not saying it's all conspiracy theory. I mean, these are things you can see that are blatant when you are looking at these things and dissecting the headline news and what's going on with the earnings, and then again positioning for those particular plays. And understand that I've talked about oil started turning this past week. I said oil is one you really had to keep an eye on, because we could potentially be going on a super cycle, as again with the global tensions with the strike, it could really drive oil back up. And like I said, they were looking for a catalyst to get oil back up, because oil is just starting to randomly fall, and it should have switched essentially on the OPEC deal, and that wasn't enough catalyst to drive oil back up. So now we have global tensions, oil starting to push back up. Oil can continue to start pushing back up, at least for the back half of the year, and even more so when you start talking about inflation and everything else currently going on. So again, there's a lot going on right now, so a lot to take in just on that sentiment. And so upcoming week, what do we have? We have to understand we are getting full-blown earnings mode again, and this is what is important. Expecting things to get a lot worse than what they are. Now, you can manipulate government numbers however you want to reflect a good sentiment, but again, ultimately understand that earnings are what we want to be paying attention to, and continuing to watch things deteriorate. The 50-point basis move isn't going to magically fix things overnight. It takes a very long time. And understand, again, this is why there's so much weight on essentially that November rate decision, which again is leading heavily towards another 50-point basis move. This is why a lot of things had to be delayed, like the port strike. It had to be delayed until next year. Again, all these things are strategically placed, and understand there are things going on underneath the surface that you are not aware of, but you can get hints and details about things with earnings, with all these other events that are currently going on and how they turn out. And this is why I lean heavily on those things, and then in different industries, and kind of look and see where you should be placing risks. So on Wednesday, we do have the FOMC meeting notes that comes at 2 p.m. Eastern Standard Time. Again, that one will be significant, because this is when we have started turning and starting to cut rates. So there needs to be more clarification as to why, what essentially the next potential plan, or why they had to cut, right? So that will be important on Wednesday. We'll see what additional details in there, that kind of gives us an idea what they could essentially be coming into November for, if they feel like they still need to cut. I think there was just one particular Fed member that felt like we shouldn't be cutting. because inflation isn't defeated. So, which has been a long time since that's happened, but we'll see what happens on Wednesday's notes. Could just be an intraday play. Again, you are in elections, so there's a lot of this stuff doesn't have as much weight. It's going to be essentially muffled, in my opinion, because of what's going on. Everything. This is why you hear so much news about what's going on outside of just the political propaganda junk that goes out there. So Thursday we have core CPI inflation. I'm not, again, concerned about inflation right now. Now, if it hits wildly outside of expectations for either the core CPI or PPI, again, those aren't really going to matter that much, and they'll again be very controlled because you're hitting some of the last ones before the election. After the election is fair game. After that point, the manipulation won't be as bad, and then that's when you're going to have to swallow this whole year and a half of massive manipulation and spending at that point. And so the Fed are aware of this. They've already thrown out that warning. I keep emphasizing that they say this is not sustainable. Once you get in the new year, all this massive spending to keep it propped up is going to stop. And then you're going to see how bad it really is. And again, if a particular somebody gets in office, they can easily say, well, it's because he's in office. When you have to understand the underlying thing is it doesn't depend. It doesn't matter who's in office. It depends on, who's going to pull strings and who isn't, that is keeping this market propped up. And if a certain somebody is in there, then they won't pull the strings, and then this thing will just come caving in. And understand that there is a lot of string pulling that allows the market to essentially sit where it's currently at. So with that being said, upcoming events, November monetary policy for November 7th, core is this week. I could have swore this was on the 14th. I did have to correct this. I don't know if this has randomly been changed to potentially improve the numbers. This was originally sitting at October 14th, even though 4 days really isn't going to make the 14th. I don't know if it's a weekend or not, but nonetheless, that was corrected. So we'll see. That may have just been my mistake on that one. But then upcoming earnings, we'll go ahead and pull up the calendar here in a second and look at what's going on there. Expected moves. We got a big move. If you've noticed here, again, this is why I always check the expected moves. We're expecting a big move this week. You're starting to get earnings. You're getting bank earnings on Friday. That is massive because that has a big impact on everything. The banks essentially establish everything. All these businesses and everything that is based off a broken system. So again, pricing in a lot. They don't want you to make money if the market starts to sell, because a lot of people are in the market now. And so again, they'll price in the end of the world, so you can't make any profit off of what's currently going on, at least not off the index. A lot of these other individual movers, they'll start pricing in just depending on how close you are to the earnings. Tesla has a lot priced in. 21 is very, very high for Tesla. They do have Robo Day for the Robo taxis on the 10th. So that'll be an important date this week to be watching and paying attention to. I've talked about this multiple times when Tesla was down at 160 over the past couple of months. I said the next potential big play would be Tesla, especially if FSD gets off, and then humanoids. So they have two really big back-to-back movers just within Tesla that it differentiates itself from everybody else. And it's not just the EV, they're a technology company. And they reinstate that multiple times because you have to understand what they have bigger plans than a lot of people, or essentially what Wall Street is looking at, right? Wall Street only cares that it's EV, and EV isn't doing so hot right now, but you have to understand everything else is very, very important. Boeing's at 7, so Boeing has actually come down a little bit. Boeing's been kind of high in general just because a lot of the bad news that's been floating around with it. And then JP Morgan, very, very high. They're anticipating an 8-point move. That's double what it typically is. And understand it only moves typically about 4 points a week, 4 or 5 points a week, and now it's up to 8. So again, they report on Friday. That will be extremely, extremely important there. So with that being said, let's go ahead and take a look at what we got here on earnings. Now we typically have we don't really have this much earnings, but it's like they're throwing a smattering in. I talk about strategic placement all the time on earnings, and they have this smattering essentially of some important pieces to kind of see where the economy is at. because they can brace themselves. And I've been talking about this, that they keep changing these. This is why you have a lot of banks, a lot of your big banks reporting on Friday, because if it gets nasty, they can take it into, again, the weekend to try to cover it up and not let the market just randomly sell off. That they can try to control it. That if it gets wildly out of control on Friday, they can get in and create whatever kind of creative package and leverage, you know, leverage $10 million into $100 billion, just to try to bail these banks out, right? This is what we saw before, and this is now why you are seeing these all being reported on a Friday, if that does happen. Now they're doing this smattering of different companies to try to get a taste of what could potentially be coming, because they know that things are going to get bad. They don't know at what point that's going to happen, but they have a good idea when that could occur. So we need a good smattering before we start getting into a lot of the industry leaders. I talk about this all the time. Industry leaders are front loaded on beginning of earnings, and we are starting a new earnings cycle. Q3 is over. It's time to start reporting on it. And again, this isn't going to include any over the next 2 quarters aren't going to really include any of the rate decision cuts, right? Of the 50 points that we just had. You're still going to have to go through 2 quarters, which means things are going to get a lot worse. And then again, understand you have a lot of loans that are maturing next year, which again, coming off of a zero interest rate environment, or close to zero interest rate environment, into even what we have now, even after a 50-point basis move, is still dramatically different. And a lot of these companies just can't afford that. So this is why, again, leaning into next year could be a really, really bad year. But again, we are hitting the pivot point. But I can't emphasize that enough. Just because we start cutting doesn't mean it's magically fixed. You have to go through the worst of it before things start turning. But we can at least look and see, okay, well, next year could be the pivot point. Ultimately, understand as well that inflation is going to come roaring back as soon as you start letting off the gas when you're doing rate increases or pausing. As soon as you start cutting that down, inflation is going to start coming back. And you start looking at inflation in the next probably 6 months, so around next springtime, you can start really paying attention to inflation. And we'll start shifting our conversation more to start looking at inflation at that point. Again, while everything is heavily leading toward next year, this is our 2007 currently right now, and 2025 is going to be our 2008. And this is why you need to be paying attention to these things. So these PepsiCo would be good to watch. It kind of gives you good insight into where food is at. Again, that will be very, very important. Pizza as well, Domino's, that would be important. Travel would be interesting to see where travel is at. Travel is another big one. There's been a lot of jobs based around travel. So Delta would be extremely important on Thursday. Then, like I said, you have a lot of banks reporting: JP Morgan, Wells Fargo, BlackRock. Those are all very, very, very important moving forward, because again, if they at all do bad, you're going to turn around next Monday, have some of the finish up with the rest of the big banks, and then you're going to start getting in Tesla earnings and some big tech next week. And so that's what's important. So again, you'll get a smattering of what's to come. And then again, banks will be extremely important, because if they show any weakness, that is not good, especially JP Morgan, because they have more shares of bank than they should actually legally have, right? But because banks were failing with First Republic, they were able to take on their good assets, and then essentially the rest of that bank has just been obliterated. So again, all things to consider, the banking crisis is not over. None of this stuff is over. None of this stuff, inflation is not defeated. All these things that you're being told, strong and resilient, is not true. Right? There is way too much weakness in the current system and manipulation that is causing it to get worse. And that's what I want to try to emphasize on when I talk about these things, is you need to understand that things are much worse and amplified because you're delaying the process of naturally just letting it correct. And so what we've seen and what I talked about is the regular cycle that we had since October of last year is we paused, and you will typically have a rally for a couple months after that until you have to start cutting again. And then there will be a sediment as to why you have to start cutting. Now, again, you're told right now, And again, this is all manipulation because they're trying to strategically place this, but you're being told that right now that we're just trying to essentially kind of pre-grease the skids. We don't really need to be cutting, but we're going to cut. What sense does that make? If the market is as strong as you're saying as it is, then well, there's no sense on actually cutting the current interest rates, but they are cutting and talking about another 50-point basis move. Now, again, talk is cheap. What you really want to see is you want to see the actual action taken. If 50 points is, then that is sheer panic, right? But that is not till November. So you're looking again, when you're talking about the next rate decision is on the 7th. So you're looking at after the election, right? So you just got to get this thing after the election. After the election, then you can do whatever you want. You can throw it up to 100 points if you want, right? And not saying that they will do that, because if you do that, it's sheer panic. But I want to be surprised if they even bump it up if they do another 50 or 70 points. And then you have December, which we'll have to see. Again, at this point, I don't want to project, especially when it comes to interest rate cuts. At some point, I think they will pause because they want to start seeing the impact of what it will do. Because again, you're bringing inflation back into the equation on their terms. And so you have to be very careful on how you navigate that current infrastructure and how that plays out. So again, we will see what happens here, but ultimately things are not looking great. And like I said, once the election happens, a lot of this stuff will start coming to the surface. And at that point, then you can take positions. If you're going to take short positions, bond plays, right? Because it's going to start wildly getting out of control. And then again, depending on who's in office, I think a lot more strings would be pulled for some particular individuals than others. And then ultimately understand it could be offloaded a lot, kind of staggered, or it could just be a full offload. And so this is what you need to understand. And so when you're in the markets, you do see these things a lot. So with all that being said, if you made it this far, I do appreciate you. You can go ahead and drop a like if you would, please. And then I will see you guys on the next one.